Hey everyone, welcome into our latest Trade to Black podcast. Happy President's Day. I'm your host, Shad Dales. Today we've got an interesting angle. We want to cover where we're diving into a recent major investment by Warren Buffett's Berkshire Hathaway. They've invested $1.2 billion in Constellation Brands, a leading alcoholic beverage company. But why did they do it, and what does it potentially mean for the cannabis industry? So with that, let's find out. First, why did Berkshire invest in Constellation Brands? Berkshire Hathaway's investment in Constellation Brands is a strategic move. Constellation, as we know, is known for its popular brands like Corona and Modelo. Despite a challenging year for alcoholic beverages, Berkshire saw potential in Constellation's strong portfolio and its ability to bounce back. By investing in Constellation, Berkshire is betting on the company's resilience and growth prospects in the beverage market. Okay, so now here's where it gets interesting for cannabis enthusiasts. Constellation Brands, as we know, has a significant stake in Canopy Growth, a major Canadian cannabis company. This move is particularly noteworthy because Canopy is well positioned to benefit from any future changes in U.S. cannabis laws. If cannabis gets rescheduled, Constellation could see an increase in value due to its indirect exposure to the cannabis market. This is interesting. So what kind of position did they take? The insurance conglomerate revealed its fourth quarter portfolio update showing that it entered a new position in Constellation Brands with 5,624,324 shares valued at $1.24 billion. This is significant because Warren Buffett and his firm, as we all know, are considered to have the most disciplined investment strategy, focusing on great companies, trading at a discount to their intrinsic value. Constellation Brands fits the portfolio, especially with its strategic investment in the cannabis industry through Canopy Growth. Now let's look at the cannabis industry and its potential. The cannabis industry, as we know, has been gaining traction, especially with the increasing acceptance and legalization in various regions. Canopy Growth, whether we want to admit this or not, has a strong market presence and is a key player in the space. By investing in Constellation Brands, Berkshire Hathaway indirectly positions itself to benefit from the growth potential of the cannabis industry. This investment could, and I want to say could, highlights the growing acceptance of cannabis-related businesses and the potential for significant returns. So let's now shift to the impact of Donald Trump's administration on cannabis rescheduling. First up, under the Biden administration, the process of rescheduling cannabis was initiated. However, with Donald Trump now taking office in January of 2025, momentum is building. But to be clear, uncertainty still looms over whether his administration will continue to move ahead with the whole rescheduling process, though it seems likely. Trump's record on cannabis reveals a complex stance. While he supported recreational marijuana legalization in Florida during his presidential campaign, his administration rescinded the Cole memo back in 2018, reintroducing legal uncertainties for state legal cannabis businesses. But that was 7 years ago, and since then, many close confidants of Trump have communicated that his stance has since changed, viewing it as an economic opportunity for America to reschedule cannabis, plus providing medical access to military veterans, which we all know is badly needed. So wrapping this all together, why does this matter? The investment underscores the importance of staying informed about regulatory changes that could impact the cannabis industry. For investors, this move by Berkshire Hathaway is a reminder to keep an eye on the evolving landscape and consider the broader implications of such investments. The potential rescheduling of cannabis in the U.S., we all know it could open up a lot of opportunities for companies like Constellation Brands and their investment in cannabis companies. So really, in conclusion, Berkshire Hathaway's $1.2 billion investment in Constellation Brands is a strategic play on the beverage market with an interesting twist involving the cannabis industry. While the U.S. cannabis market remains restricted, Constellation's stake in Canopy Growth positions them well for potential future growth. For investors, this serves as a reminder to stay vigilant and consider the indirect opportunities that may arise from regulatory changes. So what do you all think of Berkshire Hathaway's investment in Constellation Brands? Should cannabis investors reading much into this? Do you think Warren Buffett is even aware of Constellation Brands' investment in Canopy Growth? Let us know by leaving your comments below. We'd love to hear from you. If you like the content we produced here, don't forget to give this video a like, smash on that bell for all notifications, and greatly appreciate it if you could subscribe subscribe to our channel. One last thing, make sure to scan this QR code and subscribe to our daily Baked In newsletter delivered to your inbox weekdays, Monday through Friday at 8 a.m. Eastern Time, giving you all the latest information on the business and cannabis reform side of the overall cannabis industry. So that's it for today. Whether it's a reality or a stretch, one thing is for sure, it's going to leave a lot of investors here in the cannabis space thinking just a little bit more on where this industry from an investment standpoint could potentially go. I'm your host, Shad Dales. Thanks again, everyone, for watching.